Okay, guys, 9:30, 10 p.m. Good evening, guys. How you guys doing? How all of you are doing? So, on Facebook and on YouTube, but I want to give you guys a breakdown analysis on a setup shared on Facebook concerning us30. So, sorry, let me go back. So, 5 days ago, we have the US30 right here on the New York session, and yeah, this is the trade taken on New York session right here after liquidity sweep right there, and then the second entry, sorry, and then we see it run away like this. So give me a break. Okay, so we are recording. So this is now the outcome right there, swinging nicely and soft. So where I was actually targeting was this high. Now guess what is high? Going to the higher time frame, that is a range high. So I'm going to give you guys a breakdown analysis on how this trade was taken, and so that you can use it also in your breakdown analysis also. All right, so I was supposed to share this stuff with you guys to give you guys a directional bias on Monday, and based on how I used to do it on Facebook. Every week I upload videos or directional bias, but then I didn't have enough time to do that because I also got sick. So so I'll give you guys the breakdown analysis right here. Okay, and let's start off with what our higher time frame, which is the monthly time frame. That is what we do. So I take this off, or let me pull it back and delete everything so that we start from scratch. Now when you zoom out on US30, you can actually see that US30 has a bullish structure. Now where is our bullish structure? Let's mark our bullish structure. We have this high right here, right? And then from that high, we traded lower, we have an external low. Now what I'm marking right here are the major highs and lows. Those areas you will feel like is a strong high, is a strong low. Those external highs and lows, that is where the the pump of money got in. I don't know how I'm going to put it, but that is where the point at which the price started to buy or start to sell for a long term. So that is the major range high and range low. So that is the external high and the external low. We are marking that area. Now for us to target that area for a long term, as a swing trader or a position trader, you are paying attention to those areas because that will be your draw to liquidity. So once price shifted, you'll be targeting those range highs and low, right? So we now traded higher, and the new range high we have was printed right here. We take it right there. Okay, so after the range high was printed, we traded lower, and we have we traded lower, and we have a range low. Now let me tell you guys something about this stuff. Now what I'm trying to mark out right here and here is what I'm trying to show is that I am dealing inside a major highs and lows, right? So that is what I'm trying to show you guys right here. So once price shifted, I will know where I'm targeting. I will be targeting that range high or the range low, depending on where the market shifted into, you understand, and following the major directional bias. So if I am inside this range, right, so we have this major high, this major low, then that means I am inside this range high and this range low, and that will give me a hand to show to tell me where the price wants to go to. Just like right here, after price gave us this swing low, and that swing low did a stop hunt right here. Okay, so we grab liquidity right here. right? So we take retail stops. Remember why I talk about stop losses? If there are stop losses resting right here, that means the algorithm will have to go and take those orders, and after taking those orders, where do you think it has to go to? It has to deliver the orders to the opposite side where we're having the pending orders, right? So we take the orders. As a smart trader, has also the institutions also, they are buying those sell orders. Those retail traders, those traders trying to sell below right here, the other traders, the institution, the smart money, those who are smart, they are not buying those orders. But then it is the algorithm that controls the market. The algorithm is solving the problem of what? Taking and executing those orders that are pending. So it takes those orders, it has fulfilled its job to take orders from those who are trying to sell, and that means there's buyers in the seller. There's buyers who are willing to buy from those who are selling. So it bought there, and when we deliver to this area has a draw to liquidity. So once I see the shift on the lower time frame, I'm taking my trade and I'm targeting that range high. Okay, so that is what I did right there. So now I'm inside a new range highs and lows. So I'll take this off right here. I don't need it anymore. I take this off right here. I don't need it anymore. I take this off right here. I don't need it anymore. So now I am not dealing in this major range high low. Now the most interesting part is that it is a overall directional trend. All right, it's an overall bullish market. All right, there is no bearish market printed for us right here. So now after that, what I saw was based on what I taught you guys about areas of liquidity pool. We are having area of support right here. So let's indicate those areas. We have 1 and we have 2. So that is our support area. Even though I would have marked this here also, but then I'm just focusing right here. Okay. Now this right here was a sell responsible for an impulsive rally, creating a buy side imbalance, right? So this buy side imbalance was printed right there for the algorithm, so that when retail traders have that, when they happens to be a sell orders, right? I don't feel like saying retail traders or traders like that, but I'm trying to explain in a way of how the market operates. Okay, so that's economics. So if they are pending sell orders right here, so indicating a sell side liquidity pool, the algorithm will go for that area, and that is the reason why it has to print a imbalance right here, so that it will trade into the imbalance, balance the inefficiency with buy orders, buying those pending sell orders, and taking those orders, deliver it to the areas where we're having buy stops. So it traded into the order block, or let me say the imbalance right here. You will see that on the weekly time frame, but then you will know that what it did was a liquidity grab and impulsively trade higher. Okay, so still inside this range high. Now when you see this kind of movement, all right, to the upside, then we say, all right, we have created a swing low. So that means we are now inside this range high and range low, and the D range will be, if the market shifts, then I am going to target the other range high and the other range. So this here, the market is telling me it wants to go for that high, right? Now right here you can see that when price got into support level, right, it bought. For what reasons? It bought for it to be able to sell, to take pending orders, and then starts to buy. Okay, so this right here, this buy close candle, big body candle, we will refer to that as a bearish order block that was printed right here. Now on the other hand, most traders, we see a supply zone right here, indicates that they will say this is a structural break, stuff like that, and they look for sell entries. While we're looking for sell entries on the market that is bullish, that range and take liquidity from liquidity pool. So it got violated, right, and we finally have this high haunted. Now when price retraced backwards, what did it retrace into? It retraced into a bullish order block. All right. Now this is responsible. This sell candle was responsible to take liquidity from here and pumped in a buy price, a buy order to violate a supply right here, to violate this bearish order block. You can see how clean and clear it is right here. So price retraces backwards to that candle responsible for that and go bullish. But then that is not what I'm interested in. That's not what I'm trying to show you guys. Or that not something you say is the reason. For me, the reason is because we are having a gradient range right here. You can see the candlesticks ranging, and when it traded lower, what did it do? It hunted 1, 2, 3, 4 previous 4 months low. All right, so we have a hunt previous 4 months low. That is a confirmation for me, and it traded higher. Now, when you see something like this, grabbing liquidity from areas where we have a sales liquidity pool, you can actually see that this right here is a support level, right? So it took that liquidity pool starts to buy. You will see a confirmation entry right here on the lower time frame. And what will you be targeting? I'll be targeting the highest high in that 4 months high. And that high is having liquidity pool right there. Okay, it's having liquidity pool right here. So now price has delivered to that place, right? Now the new thing, the idea also is that you are now inside a new range highs and low. Okay, a range high, a range low. The range was printed, it shifted, and it was drawn to a range high with the confluence of what they are grading the range that was printed right here, right? Now we traded lower again. Where do we go to? We were drawn to areas where we're having the sell side liquidity pool, areas of support level. We hunt it, and when you see something like this, you'll be going to your lower time frame to look for your confirmation, and you are taking your trade. Now we are having a new range high and a new range low. Now this is what the algorithm will have to be doing so that it could be drawn to that highest external range high and low. This right here, they are all internal range high and low, and we are drawn to the external high right there because the external low was protected, and we printed the structure in confluence with the algorithm range. All right, so we have hunted liquidity pool right there, and we're not going higher. Very, very clean. Now, seeing my directional bias and what I know price is drawn to, I now go to lower time frame to look for the setups. So here we are on the weekly time frame. You can see that's all the block I showed you on the monthly time frame right here, right? So this is the order block. So if you go to the weekly time frame and you are doing a refinement stuff, this is it right here. So it got violated, and it turned out to be a breaker block right there because it hunted liquidity, right? It hunted this low right here. So price came back to it, and we traded higher. This right here, right? So we traded higher, we traded lower again. This order block was violated for the reasons of it being in a premium pricing. So the next thing was that price trade lower to hunt this low. This is areas where we have liquidity pool. We have area of support resting right here. So we hunt it. There was no bearish structure printed right there. This is a ranging market. So after the hunt, it starts to trade lower. Now the idea is that I will also, because also most traders will be looking at this as an area of supply. Why will you be looking at this area of supply? When if you want to mark a structure, you know the structure you're marking is this high, this low, this high, this low. There is no structure break. What we use to confirm a structural break is when it breaks this major low, and we are having a maintained overall bullish structure, right? So the supply was violated, right? So we keep on running down to the lower time frame. We go to the daily time frame, and based on this is US30. My main focus is on the what's it called? The New York session. So the area of support right here that was hunted, right? So this other block that was, remember those on the mentorship also, I said that if a supply that was supposed to continue pushing the price lower is violated, then every other unmitigated area of order block will get violated because price has shifted bullish, and it is going for those buy stuff that was protected before. Likewise for a bullish structure if it gets violated. So haunted, we trade higher, violate the order block, trade lower, and we impulsively trade high to validate it. Now this also is not valid. It did not even take liquidity. It's another confluence. All right, so we're having liquidity pool right there. So, oh god, my network is bad. All right. Okay, so my network was bad. All right, so we violated the order block and we start going higher. Now I was saying that this is not valid also due to the fact that we have liquidity native highs resting right there. So that is another reason why it is not valid. So my main focus was on the weekly time frame though. First of all, I noticed the algorithm right here taking liquidity and impulsively trading higher. Now, why it was trading higher, we are seeing that every buy stop was protected, right? So if I have to be bullish, all right, if I have to be bullish, I want to be seeing previous week lows protected. You understand? So I have that previous week low right here, previous week low. Now I marked the previous week low and also previous week high. So the idea is that once that week opened, if I have to be bearish, on Monday we give me a high, Tuesday we break a structure and we will go bearish. If not, I am maintaining a bullish structure, right? So this is the previous week high, previous week low, and that is what I was focusing on. So if you go back to the Facebook page, you actually see what I marked there. Okay. All right. So this was Monday. All right. Let's go to the chart. So now I was on the lower time frame for 5 minutes. So this was my previous week high. All right. Yeah, that was what I marked right there. This was my previous week high, and this is my previous week low. Now the algorithm knows what it's doing. There is a reason why it made the previous week highs and lows so big, like very very long, so that when it can never like break structure. You get the point? So that is the previous week highs, previous week low. So the next thing I noticed was we range right here, printing area of support. So price haunted that area of support right here and traded higher. There's a supply right here in which it violated before breaking structure. So if you go down to the lower time frame right here, this is a bearish order block. It could be is a breaker. Sorry, is a bearish breaker because it haunted this high and price traded lower to break structure. So it's a bearish breaker. As you can see, price retraced backwards, mitigated it, traded lower, and finally violated it, breaking structure. And that is on Friday. On Thursday, Friday gave us a high, right? So Friday traded lower and went to mitigate the bullish order block right here. This sell candle that was made, that was pumped into the market for it to buy, all right, to take liquidity. Price tapped into the order block on Friday and then it closed. Now Monday opened. So then I use my indicator. I have the Asian range and I also have the London and New York session. So we have the Asian range. Now my attention was seeing that price was inside this order block, otherwise a bullish breaker right there, all right? So but then I prefer calling it another block. So Asian Monday opened and we have the Asian range high, Asian range low, and then we printed liquidity right? We have area of support and we have area of resistance, right? So now we can use the indicator London New York session right here. Now London didn't have any push, right? Because the US30 normally trade on New York session, and I learned that from the Wolf of Wall Street. All right, the Wolf of Wall Street, the movie, they pay attention most of the time 9:30 New York time. So that was what I was paying attention to, New York session. So I learned something from there, seriously, from Wall Street. So also, if I have to trade the stock market, I'm paying attention to the US30 stock market that is on the New York Stock Exchange. All right, is Wall Street, and I pay attention to US30. So that means I will know the stock I will have to go and buy and invest on. All right, so that is by the way. Now London opened, print liquidity for us, and also on the upside also. So that means we're having buy side liquidity pool and sell side liquidity pool. Now New York opened. What did New York do? New York hunted London low, right? So when I saw that London session hunting, New York session hunting London, I say, all right, we are also on the order block. We are now having confirmation entry that the price wants to go bearish. All right, previous week high, previous week low is down below. So there is no structural shift also. Okay, because this is my high, this is my low, this is high, and the low was printed on the order block. So I put a buy setup, and I feel like as a swing trader I am, I'll be targeting that high I talked about. So yeah, and then we trade and we finally take some partials right here, okay, on the New York session. And also there is a market maker structure found right here, which is the W structure, right? So is a smart money setup, like divergence. Yeah, divergence. So took the buy setup, and that is it for Monday. Now let's see what happened on a Tuesday. This is Monday high. Alright, so let's go to the time frame so that we use the golden range. Now this right here is Monday's high, right? And then we have Monday low. Alright, so to avoid the stress of drawing, I'll use this. So we have Monday low and Monday high, right? Now I am dealing inside this range high and this range low. So if the next day opened, I will know my directional bias. If it breaks structure, then I will go in bearish the next day. But then it is a strong bullish market. It's a strong bullish market. So this is Monday high and this is Monday low. We are dealing inside that range, right? So we trade lower in liquidity on Tuesday, right? And then no movement, no structural break. No structural break. Pay attention. No structural break. Now we opened on Wednesday. We shifted higher. So let's go down to lower time frame. It should be clear on the lower time frame. We opened on Wednesday, right? So this is the Asian low, this is Asian high, and put this on. We have the London, no movement on the London. Also New York right here. We trade higher. Now those that will be on the 5 minutes thinking that they are bearish due to the fact that they be like London has hunted Asian range high, then they'll be targeting Asian range low. Interesting, right? So we have this they will be like we have this bearish order block because we have smart money setup which has a stop hunt plus a break of market structure, right? And they be like this is a break market, but this is area of support. This is a range market. There is no structure. So what the price do? It grabbed that liquidity of support because you paying on the lower time frame without having additional bias of where the market is drawn to, you will make mistakes, right? So we have those that could mark here as their area of supply. Now pay attention to here, this range right here, this created area of support, right? Not a structure. We trade lower and we hunted that liquidity. Price trades into the supply, violated supply, trades back into the order block on the New York session, and it traded higher, came back again to the bullish order block right here, and then trade higher. New York close. You are not expected to trade New York close. So if you are day trading, you should leave at New York close, because that is where we enter a range market, right? So we are now done for Tuesday, right? Okay, for this is Wednesday right here, right? So now we mark again previous day high, which is on Wednesday, and previous day low Wednesday right here. Now pay attention to Thursday. We will know what we have to do, and let's go down to lower time frame, 15 minutes. So this is Wednesday close. Thursday opened, no movement, nothing serious happened on Thursday. We entered a choppy market, and Thursday became the high. It hunted previous day high, but there was no structural break to show that it has to go lower for a Thursday. So that means we are still bullish. Friday, nothing much happened on Friday, but then we have hunt on liquidity pool right here, taking the Asian range low, and we traded higher. Then we came back to another block right here. So the whole of this Asian gave us an order, because that's the sell that occurred before the buy, but there's nothing much that happened right here. So that is why I don't do day trading or scalping. I don't have time for that stress. I pay attention to higher time frame, and once price gets to my entry, I go to lower time frame, look for that setup, and then take my trade, and I am just swinging and let the price run to be drawn to where? The high that I am targeting. This high. For example, right here, this was where we hunted liquidity, right? That major liquidity right here. So we violated the supply zone, right? So that supply became a breaker block. So if I am to be on the lower time frame right here, I can find a setup. Now this supply, okay, let's pay attention to here. We have a supply that was violated, or likewise, some of us we like to choose this. Now this supply got violated. What is responsible to violate that supply? Now we can see when price was trading high, it was filling imbalance, but then it left a fair value gap right here. It left behind a fair value gap right here, and it was responsible to do what? To violate that area of supply, right? So what the price do? It trade back into the fair value gap, which also has a bullish order block. That is when I would trade, and when you pay attention, you can see when it happened on the New York session. I always pay attention to New York session when I'm trading the euro dollar and the US30. So we tapped, and I can just swing my trade. So price continues to trade higher. New York session, we trade higher, pull back, fair value gap, trade higher. The next day, New York session. The next day, New York session. The next day, New York session. 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 New York session, and boom, right there. So what else am I looking for? Nothing. So so that is it for you guys. Whenever you are trading, pay attention to your higher time frame. Your higher time frame shows you and overall directional barriers of where it wants to go to. After seeing the directional barriers, you go down to your lower time frame, you start breaking down from the higher time frame, going down to the lower time frame, you will see a setup to trade. If there is no setup to trade, then wait for price to print a setup for you. Don't force your eye to see something that it is not seeing. Alright, so that ends today's content. See you guys next time, and stay safe. And my course is available on Udemy, so you can go to this description link. You'll see the link to the Udemy course, and then you can purchase the course. So stay safe and safe trading. Bye.